a buyback for Woolworths shareholders. It's $840 million worth of franking credits included within that. I think that is a good starting point with Marcus Bogdan. He's joining us now from Blackmore Capital. You haven't had a chance to read the result in detail. This I know, but safe to say, the annual profit has jumped and shareholders will be rewarded. What do you make of it?
Good morning, Nadine. It's a busy day for results season this morning. Woolworths, they need to look right through the detail, but the buyback was absolutely expected given the spin-off of Endeavour. Endeavour's results, I think, were absolutely encouraging in terms of the revenue uplift and also the margin uplift. In Woolworths, the key trends there will be, have they been able to increase their EBIT margin like Coles did? And really the trends that we're seeing locally, is it return back to local shopping? Obviously, Coles and Woolworths are benefiting from a surge in online sales. And then the other key takeouts will be looking at sort of inflation through food and any issues that they're seeing on the supply chain. But my tilt certainly at the moment is to be across these consumer staple defensive companies, which I think will continue to do well as we remain in lockdown.
Okay, yeah, got that for Woolworths. Initial reaction from Marcus Bogdan. We've got Ramsay Healthcare out as well today. What were your expectations around Ramsay?
Well, I think it's going to be a mixed bag. And I think if you look at the Medicare data for July, you can absolutely see the impact of lockdowns that they're having on medical consults and procedures. Surgery, diagnostics, pathology, the PCR testing and GP visits are all down well into the double digits. And I think those trends will continue in August. And so until we come out of these lockdowns and then you see the reversal there in terms of elective surgery, Ramsay, as a hospital operator, will struggle. But then the uplift that you'll see post the lockdown, I think, will be extensive. And you're starting to see that in their Northern Hemisphere businesses in the UK and France as they're more advanced as they're coming out of lockdown. The issue with the hospitals is the public system has delayed a lot of surgery and a lot of procedures. And I think that that will need to be fulfilled both in the public and the private. So ultimately, I think the medium-term trends are very encouraging, but the short-term issues are very evident at the moment.
Yeah, final dividend of $1.03 per share, saying that it's a solid result. This is company commentary despite the COVID environment. It says that there are growth opportunities that provide confidence for the medium to long term despite the ongoing COVID-19 disruptions in FY22. Revenue coming through at $5.4 billion, and that is just from patients and other revenue as well. So EBIT at $636 million. So Ramsay Healthcare, still early days. We'll see how the market reacts to that one. But you're happy holding Ramsay then because of that reopening thematic, Marcus?
I think if you're a medium to long-term investor and you can see through these short-term challenges that many of these healthcare companies are having, you've seen that with CSL where the markets are looking through FY22 to FY2023, but no doubt in the short term you're seeing challenges in these businesses.
And I will say that revenue line I gave was just for the APAC region overall, total revenue at $13.3 billion. So that's a big improvement on last year. We'll leave Ramsay Healthcare, but stick around the space, generally speaking, because we had Medibank Private out. I think that was yesterday. It's all sort of rolling into one. What did you make of the result? Because again, there's a bit of the whole return to normalcy that could be coming for the likes of Medibank and NIB Holdings and all the rest of them in that private healthcare space.
Well, I think Medibank was one of the shining lights. they're seeing much better trends in overall growth for the industry. People are very concerned about their health outcomes. They're seeing large waiting lists in public hospitals. And for the first time in many years, you're actually seeing policyholder growth. And that's also being supported by the fact that the premium rises are the lowest in 20 years. So the participation rate for the industry is growing. And Medibank are actually leading in that growth and are taking market share. So those dynamics are very, very positive. And you have seen a significant re-rating in the shares. And I do think that those trends will continue for the foreseeable future. Medibank has indicated that they still see further 3% growth in policy growth for FY22. So those trends are absolutely encouraging. And also, I think that their move into being more of a vertically integrated healthcare company, moving into services of GPs and short stay hospitals with no gap, is also a positive development.
Now, when it comes to getting into Medibank Private, if you're not already holding Medibank, have you missed the boat?
No, I think you've seen the initial rise and the initial recognition of the improvement of the business, but I do think those trends will stay with us for some time. And Medibank are delivering. They're getting earnings growth, they're getting a good uplift in dividend, and they've got an unquestionably strong balance sheet. So for us, I think it is a very strong medium to long-term hold in the portfolio.
What is the lay of the land, do you think, where we find ourselves at this stage of reporting season, this stage of the year, exiting the North American summer, getting into the September period, which can be weak? How are you viewing what we've learned so far about the resilience of Australian companies through what was still a very difficult year?
Well, I think the reporting season, you can break it into two halves. In the initial first and second week, we actually saw really strong results. We saw earnings beats, we saw buybacks, special dividends, and a very sort of benign outlook. And that was, led by CBA, Suncorp, a better than expected result from Telstra. But then as we've moved further into the reporting season, I think it's becoming more challenging and more cautious. We're seeing far more conservatism around the outlook for FY22. We saw businesses like Ampol and Cleanaway, and then recently with this medical data, seeing double-digit declines in volumes for July and August. And so I think those companies facing into the eastern seaboard into Australia are finding conditions more difficult. On the other hand, those companies that are exposed internationally, particularly in the US market, companies like Amcor and Brambles, continue to see very good trends in those markets. So I think there's two parts to it. You've seen initially very, very strong results, but I think that's moderated as we've gotten further into the reporting season.
And only a few days really left to go of the thick and furious nature of reporting season. So no doubt we'll be doing a post-mortem shortly with you in more detail, Marcus. Really appreciate your time today. Thank you.
Thanks very much, Nadine. Cheers.